Hi everyone, I'm Dr. MVS Sudhakar. I have 20 years of experience in teaching. An MBA graduate from SV University. I have completed my PhD from Dr. Nagarjuna University, and my PhD topic is stress management among call center executives. I teach MBA students. I'm a finance faculty. I teach finance subjects, securities analysis, portfolio management, financial institutions and market, banking and services. I teach MBA students as well as BBA students. And then I have 20 paper publications in reputed journals. I have attended various conferences and presented papers. And then I have attended various faculty development programs. And then I have one patent publication, and then I'm a visiting faculty to premier institutions like Symbiosis Institute of Management and Sciences. Now, I'm a teacher for you to teach the subject financial institutions and markets. I'll brief you about the financial institutions and markets, how important is these financial institutions and market for BBA and BCom students, and what you are going to learn in this particular 5 units in this particular subject. I am going to brief you all about it. So, financial institutions and markets, this is a very important subject in the Indian financial system. So these financial institutions plays a very crucial role for the smooth functioning of the economy. So in a country like India, where India is developing and it's becoming and it's marching towards from developing nations to a developed nation, these financial institutions and markets plays a very important role. So I, through these particular presentations, will make you clear understanding about the financial institution in India, how it is prevailing, and how it facilitates for the economy to function very smoothly. That we are going to discuss in this particular 5 minutes. The very first unit is all about financial system. The financial system talks about how Indian financial system is all about. Who are the major players in the Indian financial system? So an effective financial system will facilitate the flow of money from the savers to the users. Savers are the people who save the money and users are the people who uses the money. A common salaried employee will save the money out of his savings, or maybe any businessman, he saves the money for his future. That money, how it is being channelized from savers to the users. Users are the industries or the institutions which are the users of the money. They require money fixed as a fixed capital or a working capital. So how this entire mechanism is there with respect to how this money is being flown from the savers to the user? What is this entire financial system? In between, who are the intermediaries? Intermediaries may be the bankers or any other financial institutions. That plays a very crucial role. Who are the regulatory bodies who regulates this particular entire financial system? Maybe that is SEBI or maybe some other RBI. They are regulating the body and seeing that the entire system is foolproof and the entire system is working very smoothly. So overall, we will learn in the very first unit about the Indian financial system, how important it is to a country like India. The second unit is all about financial institutions. Financial institutions in the entire financial system plays a very key role. We have financial institutions like commercial banks, we have NBFCs, non-banking finance companies, we have venture capitalists, okay, we have angel investors, right? So many financial institutions are there, insurance companies, that comes under the financial institution. These financial institutions plays a very important role in the Indian financial system. Let us say, for example, financial institutions like commercial banks. Commercial banks are the pillars for this Indian economy. The financial systems, the commercial banks, we all know that commercial banks, how it functions. The people who save the money into the commercial banks, that money which is saved with the commercial banks, the commercial bank is in turn giving it as a loan to the corporates or maybe the people who are in need of money. So usually the savers, will not be knowing about the users. But in between these particular financial institutions like commercial bank, they are taking the money from us and giving it as a loans to the users. So we, the people who are saving the money with the commercial banks, we are getting some rate of interest on that. And the users, now if at all if they cannot come to the savers and they cannot directly ask that you give your money, I'll invest in so and so what we can say projects, and in return I'll pay back money to you. We will not be having confidence with the words of the users. right? So in between, the commercial banks is acting as an intermediary or a facilitator in this entire financial system. And similarly, we have venture capitalists, we have insurance companies, we have NBFCs, non-banking finance companies. They are all the financial institutions which are playing a predominant role for the growth of the Indian financial system, or for the economy. That we will learn about the various functions of these particular financial institutions and the services which they are going to provide. That we will learn under chapter number 2. Chapter number 3 about Indian money market. Money market is a market for short-term funds. Either it may be to the government, or it may be to the financial institutions, or it may be to the, what we can say, the companies. So companies, they require short-term money requirements. So these short-term money requirements, how these particular they get it from the money market. Best example is the government is what we can say, the government is the major borrower of funds from the money market. So money market, how they get the money? They issue the treasury bills. And RBI, on behalf of the government, they issue the treasury bills, and these treasury bills will be bought by the other commercial banks, and thereby what happens is the government will get the required funds with which they can invest on various infrastructure and developmental activities. Now, what is this money market? How it functions? What is the key role of the RBI in the money market? We'll also talk about various important aspects in this particular money market. That is all about the third unit of this particular chapter. And then we have debt market. Debt market is the market for the outsiders funds. Debt is a loan amount, in fact. So loan amount, and then the debt market comes under the capital market. So loan amount, long-term funds, that comes under the debt market. So companies, they go for issue of I mean to say that the corporates. So corporate use the debt market by issuing the debentures for their long-term loan amount. And similarly, the government will also uses the debt market to raise the long-term capital by issuing the government securities. Now, how these debt market function, and who are the regulatory bodies debt market? So all about that debt market functioning we will learn in this particular chapter number 4. And finally, the very important one, that is the equity market. Equity market is the market for the owners' funds. Now, the shareholders are the investors in the equity shares. Now, when it comes to the equity market, so how the companies will go for a equity shares, how they issue the equity shares, what is the role of the merchant bankers, what is the IPO, what is the FPO, and what is the rights issue, what is the bonus issue, and we'll also learn about certain concepts relating to what is the primary market, secondary market, role of secondary market in the Indian economy. We'll learn about the concepts like BSC, NSC. We'll learn about the indexes. We'll learn about the SEBI, the functioning of SEBI, very crucial regulatory body, how it regulates the secondary market and primary market. So that concepts we are going to learn in this particular 5 minutes. Overall, it's going to be a happy learning for you. I wish you all the best. Thank you.